I want to introduce our event for the day. It's the New England Real Estate Journal 2020 Rhode Island State of the CRE Market. I want to thank our sponsors for today. These are some of these are our annual sponsors: Inspired Technology, an annual sponsor; U.S. Pavement Services, an annual sponsor; NorthMarq, an annual sponsor; Mayoral Architects, an annual sponsor. And today's sponsors are Par Corporation and Starkweather Shepley Insurance Brokerage, Inc. And this is me, Rick Kaplan. You can listen to our podcast that usually comes out weekly on Apple Podcast, Spotify, and Amazon Prime, as well as on our YouTube channel and our New England and New York website. That's our panel of speakers for today. And I'm going to introduce our moderator, Jacavone. I don't know, I get screwed up on last names. And Peter Jacavone of Starkweather and Shepley Insurance. It's all yours, Peter.
Thank you, Rick. I want to introduce our speakers today. First would be Jeff Munoz from NorthMarq, John Pariseault, attorney at Hinkley Allen, Chelsea Siefert from Quonset Development Corporation, and Tim McGeary from Northeast Private Client Group. I want to give them all a second to introduce themselves, and I will start with Chelsea. Obviously, ladies first.
Thanks, Peter. So I'm Chelsea Siefert. I am the Planning and Development Director for the Quonset Development Corporation. QDC manages the 3,200-acre Quonset Business Park. And we are also in the midst of kicking off a new program for statewide industrial site readiness called Rhode Island Ready, which I will talk about a little bit later. Happy to be here.
Next, Tim McGeary.
I'm Tim McGeary. I'm with Northeast Private Client Group. We're a mid-market investment sales brokerage. We operate in Rhode Island, Connecticut, Massachusetts, New York, and parts of southern New Hampshire. And we focus, 80% on multifamily. We do some retail and some mixed use, but price range is kind of a $1 million to 20 million in that mid-market range.
Next, I will introduce John Pariseault from Hinkley Allen.
Good morning. Thanks for having me today. My name is John Pariseault. I'm a partner at Hinkley Allen. The firm was founded in Rhode Island, but has offices in all of the New England states. I'm a partner in the real estate practice. I represent mainly developers and owners. The firm is a full service firm, and the real estate group is in all asset classes, representing developers in acquisition, permitting, financing, sale, leasing, kind of a full service real estate services.
Thank you, John. And as Rick said before, I'm Peter Jacavone from Starkweather and Shepley. I run the construction and development sectors over here, kind of similar to what Mr. Pariseault said. I kind of work with a lot of developers, construction outfits that are developing a lot of land in Rhode Island. So thank you. So we'll jump right into it. My first question today is for Tim, and obviously panelists, don't be afraid to jump in if you have anything to add. Tim, the question I have for you is, how does demand in the greater Providence area compared to the large metro cities with growth in multifamily market? Where would you say the largest interest for investors in Rhode Island market currently is?
Good question. I'd say demand in Providence and Rhode Island as a whole is pretty high right now. I mean, you could argue this for any market currently, specifically multifamily. I think obviously just the uncertainties we've seen through COVID and even, till today with office and retail has created a stronger demand for multifamily, just due to the fact that collections were pretty high, just about everywhere. And if, tenants struggled to pay, luckily the government bailed them out through some programs. But I would say, Providence's demand is high, just as pricing continues to grow in Boston, people look for alternatives, and same with New York, to invest in places like Rhode Island, where markets are still good and rents are still high, but your dollar might go a little bit further than, you know, obviously Manhattan or downtown or Back Bay, wherever it may be. So, you know, with that high demand through the uncertainty with retail and office, and you know, your dollar stretching a little bit further, we're definitely seeing high demand in Providence and increased pricing through not only that, but obviously interest rates are all-time low. They are ticking up a little bit. Those are still remain low, and rents just continuing to increase across the state. But as far as, you know, greatest interest in the state of Rhode Island, I mean, I think you still have to point to Providence, just due to the fact that it's got the most going for it, as far as, you know, jobs, universities, you know, restaurants, shops, whatever it may be. That's kind of what we're seeing right now, and it's a good time to be a seller and an investor and a broker right now, just about anywhere, to be honest with you.
Thank you, Tim. Anyone want to add anything to that, or? So my next question is for Jeff. Jeff, thanks for joining us. Jeff joined a little late. Jeff from NorthMarq. The current rates being very reasonable, now with inflation rising and supply chain shortages, where do you see the rates heading in 2022? Are investors looking for more multifamily, office, or industrial? Do you see a lot of new refinancing and new construction financing?
Thanks, Peter, and I appreciate everyone's patience while I went through some technical difficulties. So you're right. The current rate environment is still really good. It's still very favorable. You're still seeing favorable pricing when it comes to floating rates versus permanent financing. You know, spreads haven't really changed too much. It's just the underlying indexes that seem to be the real picture, which is driven a lot by, you know, conversations and communication being delivered from the Fed. I know March 15th is probably the bigger date that we're all looking at. It's about a month out. We're expecting to see a rate rise or an increase in short-term rates. So when it comes to kind of the two factors you mentioned, the you know, the inflation rising and the global supply shortage. So those two factors seem to be really pushing hyperinflation. I'm not trying to be an economist, but typically when that happens, there has to be some sort of breaking point when it comes to, you know, permanent versus short-term rates. I think the market has already factored in these rate rises, or at least for 2022. On the longer end of the curve, I believe you probably see a spread or an increase of rates for about at least 30 basis points since the beginning of January on the 10-year U.S. Treasury. So, you know, just given that, your rates are going to naturally rise when you're going to go off of permanent financing. But what does that mean when it comes to some of the shorter term financing or even construction financing? That means that a lot of floating rate construction loans are still going to be favorable. I know borrowers will probably be looking to include some sort of provision allowing them to the flexibility to go permanent once the rate environment stabilizes a little bit. But being in the rising rate environment, I can imagine a lot of developers looking at their construction projects and having to put in a little more of a buffer when it comes to their financing costs, as opposed to, you know, before, where you can almost depend on the rates staying low. You know, 3 rate increases in a year is significant when you've got, you know, a $10 million project and your floating rate right now is probably, you know, 250. So it does tend to, you know, start factoring into some of the larger projects. But in the short term, I think, you know, a lot of these projects are still going to be lower leverage. The financing requests, I think, traditionally have been, you know, anywhere between 65 to 75% of costs. So, you know, the rate increase is going to add, you know, as marginal of a cost addition it's going to be, it's still within, it shouldn't shift the profitability model for any particular project. And I think just to kind of wrap it around multifamily, office, or industrial, I mean, multifamily has been a more consistent and stable asset type. You're still seeing cap rate compression really across all asset types, but mostly in industrial and multifamily. You're starting to see multifamily pockets of development opportunities start showing up in industrial areas, just given the high cost of land and the availability of or size of the parcels available to them, as opposed to where in residential areas, you're usually going to rely on some sort of an assemblage model to get some projects up and running. So, definitely a flight to quality. I think multifamily and industrial are going to continue to be, the stronger asset types as more capital is interested there. But, I think across the board, you're going to start seeing opportunities come up with refinancing from floating rate to fixed rate loan structures.
Thank you, Jeff. It's funny that you say that, right? Because in the insurance world too, it's kind of the same model, right? We have a hard market, right? Because a lot of these organizations and companies are seeing the squeeze from COVID, are now rebounding. Let's call it the rebound, and rates are rising. And I always get, the same kind of, probably the question you get is, why are they increasing when the economy is not doing as well? Well, insurance companies, I always say, still need to get their capital at the end of the day. So when companies are thriving, as I'm seeing it, it's either one of the spectrum. One company's thriving and they're not doing so well. So I think that has to do with a lot of markets. And I think that, somebody like John's probably seeing it as well on his end from, some of his clients, either doing really well or, trying to struggle to get through the COVID rebound. And I think it's coming back. And kind of comment on what you said about rates. I talked to a commercial lender yesterday for a large client of mine. And that was the thing, is that rates are on the rise and he's expecting the 2022 rates to increase. So thank you for that. We very much appreciate it. John, you have anything you want to add? You look like you're thinking about it.
Oh, no, that was really insightful. Jeff, I agree with everything you said. I think it's interesting that you mentioned the multifamily development in typically industrial areas. That was interesting. I was expecting to see a retail to distribution conversions, and in fact, that really hasn't happened as much. I noticed at one point that I think it was JLL, they created this group to sort of have expertise in that area, and then maybe a few months later they said the demand's not there. So it was interesting to see that retail. I expected these big boxes to be converted to more distribution, and I didn't see it as much. Although Chelsea she's going to contradict what I just said with probably an example of that. I do think that retail, from what I hear from clients, is bouncing back in some ways, just differently. So I see investors looking at that asset class again. But overall, I just see a lot of demand, a lot of people looking at deals, sellers finding it really attractive right now to sell, but also struggling with that phenomena of, if I sell now, what will I do with that cash and where can I reinvest it? And the supply is so low on the acquisition side. So we're having a lot of conversations around that, but those are my 2 cents.
Thank you.
Yeah, we did see one instance of in a retail to industrial conversion here at the park, but I would say it was likely due. So it was General Dynamics and Electric Boat took over what used to be a home improvement store here at the park that had sat vacant for a while. In that instance, I think it was really because of General Dynamics' existing presence here at the park and the lack of space for expansion generally around their campus. So they took the opportunity that presented itself to them and transitioned that facility into manufacturing, probably just due to circumstance rather than a desire to actually take retail space and transition it.
Thank you, Chelsea. My next question is actually for you. So it's a 2-part question. Quonset has a lot going on. So what would you say the driving factor for companies interested in bringing their manufacturing to Quonset? In regards to that, Quonset Development recently announced the NYREJ program, which takes Quonset site readiness approach statewide. Can you give us some details on Rhode Island Ready? Who is eligible and how you anticipate this will expand the state's capacity to host new industrial companies?
Sure. Yeah, those two questions are really very much related. We see folks wanting to come to the Quonset Business Park because we have a site readiness program here that is in place. So back in, I don't know, maybe a decade ago, we took all of the available parcels here at the park and we pre-permitted them so that when a business wants to come to Rhode Island, we could say, you know, we have this piece of land, it's pre-permitted, and you can break ground in 90 days. And that has been extremely attractive to businesses. One of the most recent examples of that was the Infinity Meats facility, which is here at the park. They do all of the pre-packaged protein for Stop and Shop. Leaves, is created here and goes, throughout the Northeast to those stores. They specifically chose to come to Rhode Island and the business park because of that 90-day in the ground guarantee. In general, that program here at the park has created over 3,500 jobs and initiated over $682 million in private investment just on those site readiness parcels. So we're pretty proud of that. And it has brought 41 companies to the park that maybe otherwise wouldn't have been here so quickly. So Rhode Island Ready is really an attempt to take that site readiness formula and spread it statewide. We see that 90-day, in the ground guarantee is really effective and a really good marketing tool for companies who are looking for a place to land. And we want to make sure that we, as a state of Rhode Island, have the space for those companies to come pre-permitted, all fully engineered and ready to go. So the program is really designed around sites, right? Because it's site readiness. So any site in the state that is already zoned industrial is approximately 10 acres or could support 100,000 square feet of industrial development is eligible for the program. There is a little bit in there about transportation, right? We want to make sure that they have a good transportation corridor that could support the freight traffic they would generate. But generally, those sites are all eligible for enrollment. We also have a category of enrollment for municipalities or infrastructure providers who want to extend infrastructure to activate an industrial district. So if you're a municipality and you say, I have this industrial district that's 60 acres, 100 acres, but we really haven't seen much development there. You need a water line extension, a sewer line extension, you need a traffic light, whatever it might be. We can help you get that in place to help activate that district. And then we also have a category of eligibility around expansion of industrial property. So if you are an industrial business and you're on a site zoned industrial, and you say, I really, if I had a little bit of engineering, if I had a new traffic light, if I had a sewer upgrade, I could expand my business significantly, then you would be eligible as well. So it's really statewide, really hoping that we can invest in Rhode Island's industrial sites to turn them into jobs for Rhode Island and economic benefits. We've seen here at the park that, when you're prepared, an opportunity knocks, it equals success. And we're trying to turn that around for the whole state.
So Chelsea, kind of few comments, right? Because I work with you guys and, phenomenal agency, just a phenomenal team. And when I think of you guys, I think of the teamwork that goes on behind the scenes, from the engineers to the finance to everybody involved. And, I'm very happy to hear that you're kind of expanding this throughout the park, because anybody who hasn't driven through the Quonset Development Business Park, it's like a construction site 24/7, right? Always something going on, expanding businesses, bringing jobs. And I think right now the most important thing is that, bringing jobs to people in the state. Obviously, unemployment and being what it is, we want to make sure that, give people the opportunity, using that word opportunity, to, be available to work if that's, fits their model. But at the end of the day, what you guys are doing, and I think bringing it outside the park is going to be huge, bring huge dividends to the state of Rhode Island. And I think, you know, one thing I think about when I think about that is I think about the turnaround time, right? 90 days is very quick. To get a business going, to be available to help somebody. And that's how I look at you guys. I look at you guys as, you know, you're drivers of the state economy. So not only thank you to you, but thank you for your team. And, you know, I wish more people knew about this program, and it's more publicized because it's a great program, and I've seen it firsthand. So thank you.
Thank you, Peter. Yeah, we, you know, we just launched in January. So Rhode Island Ready just kicked off January 10th. We had a nice event with the governor and the Commerce Secretary. So we are still accepting applications. There is no deadline, right? If you know someone who might benefit from this program, please encourage them to reach out to us. It's info@riready.org. Our website is riready.org. Happy to literally talk to anybody who thinks that they might benefit from this program. And the program itself has both money for soft costs, right? Engineering and permitting, and then also money for capital investment. So we're really trying to run the gamut of all the potential things that an industrial site might need to bring that site to a pre-permitted or pad-ready state. And so we want to talk to everybody, literally everybody who could potentially benefit in some way from this. Send them our way.
Thank you. Kind of pivoting off that, you know, I know John, somebody who, as you mentioned before, works with your team, probably can go into a little bit more depth on what he's seeing. But John, I do have a few questions for you on transactions that you're seeing within the state. You know, what are the active sectors you're seeing, supply and the supply and demand in those sectors, and where, you know, more importantly, where is that coming from?
Sure. So just to echo what others have said, really busy in the industrial area and in multifamily, and to some extent retail, and then the office is a little bit softer. But, you know, it depends on what kind of office. I have some clients who are doing more of like a lab conversion, especially as you head north on 95, and that's going absolutely crazy. I think the pandemic has some lasting effects, which we're still trying to figure out for office in terms of remote working. So I would have to definitely say, you know, multifamily, then industrial, then retail, then office, if I were to rank them. I think in the industrial, you know, I think if you ask some brokers, they tell you that vacancy in Rhode Island is around 2%, which is just crazy, which will likely lead to more speculative development. Which actually, just a segue to the Rhode Island Ready program, is kind of perfect timing for that program, because, you know, speculative development, there's always questions on the, you know, the capital stack and how do you make it work. And if you have this piece of property that you always knew would be a good site for an industrial development, but just wasn't sure how to put it all together, QDC has the expertise, a track record, reputation, and you know, folks, staff available to talk with somebody that has that and is looking to develop it. So they have the know-how and they have the resources. So, you know, increasingly we're starting to see out-of-state investors come into Rhode Island. Interestingly, big medical office building trades have occurred with private equity firms coming in and scooping up portfolios of medical office building. If you think, you know, that East Greenwich corridor there and other places, we're seeing those trade. We are seeing out-of-state investors. You'll see the Johnston Amazon deal, Smithfield, big warehouse proposal. Warwick, you're seeing a 500,000 square foot distribution center proposal on the table. And I think as others have stated, it's just more value, lower price points, higher cap rates in Rhode Island, attracting outside investors.
Yeah, and you know, you mentioned the Amazon deal, right? Some of the developments that we're seeing, because I look at a lot of these contracts for my side of the business, John, as you can imagine, right? And I think one of the unique things too is that they're keeping a lot of the work in state, even though they're out of state investors, which is great for the economy, right? We talk about the marketplace, but they're keeping local jobs local, meaning construction companies, individuals. So yes, you might see out of state investors, but they also realize they don't know the landscape of the dynamics of, right, the development economy, and they're using local people to kind of get that push inside that. So I think that's really unique. And kind of same thing with Quonset, right? With Chelsea had said before, a lot of the construction that's going on down there is being done by local contractors, a few out of state. But again, being a Rhode Islander, I mean, makes me proud, right? The other day that we're using our own people to get the job done. Does anybody else want to comment maybe on what John said? Or John, I actually do want to kind of pivot to, you know, any development. I see that we're seeing out-of-state developers, but and it's a lot of private equity money. Anything unique about or why you think this is happening? Why you're seeing a lot out of state? Just the more opportunity, or any specific reason?
I think it just boils down to sort of it's customary, I think, at a higher end of a cycle to see that that type of investment from out of state. But like you said, you know, we're getting a lot of in the Providence office, we're getting a lot of like local council requests, like you said, or, you know, for instance, like, you know, zoning matters, which you want somebody on the ground. So we're getting a lot of requests for that, or, you know, lending issues and title issues, and, you know, like local requests to serve as local counsel to these outside corporations to help them navigate the landscape, you know, in Rhode Island.
Thank you.
Peter, I'd like to comment. John mentioned sort of spec industrial. So here at the park, we several years ago started a program we call our Flex Industrial Campus. And basically QDC is working with a private partner to build small space spec industrial, right? So these are units that range from 2,000 square feet, 2,000, 4,000, and 10,000 square foot units, which are sort of combinable to make different sizes. And those have been in very high demand over the last 2 to 3 years. Right now, all of my buildings that we spec built are full, except for I have one that has, I think, 4,000 square feet left in it. And we're in construction with another one, and I have options in play for all 4 spaces, all 4 10,000 square foot spaces there. So there is a very high demand for industrial facilities that exist, you know, that folks don't have to come and build their own. And we're seeing for those, you know, a little bit smaller sizes for the startup companies, or, you know, moving from, you know, one space to another.
Chelsea, are you guys recommending maybe some design build people when leasing out these spaces, or people that you might work with, or is that just out of your spectrum?
So what we do on those spaces specifically, if there's any sort of internal fit out that needs to be done, we connect the folks with the contractor that we work with that built the building. So they'll work together collectively. Typically though, our 10,000 square foot units come with office and conference space, bathrooms, and there's not a whole lot that needs to be done, right? Because you have the large sort of manufacturing bay, and then you also have space for administration. So those spaces have been very attractive and are in very high demand.
Thank you. My next question is kind of for Tim and Jeff. So where do you see some of the real estate values, how leasing cap rates are performing?
I'm sorry, do you mind repeating that? What was the last part?
Where do you see some of the real estate values, how leasing cap rates, etc., are performing? I apologize.
No problem. I mean, just kind of back to John's point, he summed it up pretty well. As far as, you know, you do see a lot of, towards the higher end of the cycle, you do see a lot of out-of-state capital coming in. But, you know, Jeff could, I'm sure, follow up after I speak here as far as cap rates. You know, when cap rates are this low and interest rates are this low, obviously you're going to see a higher price, just because money is a lot cheaper to borrow. So that obviously affects things, and rents have gone through the roof. And I'm sure, you know, again, something Jeff could probably speak on a little bit better, but depending on the asset type, you know, you're going to see different rates when you're borrowing, and obviously that's going to affect different prices for multifamily, which is red hot, down to office, which is struggling a little bit. And we're actually seeing some in Providence specifically right now in downtown. We're seeing quite a few of those downtown office buildings being converted to residential.
Yeah, and to go off of that, you know, I think generally with kind of the combination of the out-of-state capital, like, you know, if you're a Boston-based investor and you need yield, you're not going to look in Boston. You know, you're going to look to a neighboring adjacent city, you know, or on the secondary market that's going to be a little bit outside, so you can actually obtain, you know, a cap rate that's, somewhat affordable. John mentioned the medical office space has been, a couple private equity firms are looking at that, and you're starting to see cap rate compressions on that end of that type of office. I think you have, you're booing around like 6.25 when it comes to those types of cap rates on a medical class B office. And I'm sure it's going to be even tighter for class A. But I think fundamentally the market has been so stable that as folks are looking into these areas and they're willing to look at secondary and potentially even tertiary markets, those factors start playing a huge role into their equation. So, 2%, 3% on multifamily and industrial vacancies, and you can see historically it's been sub 5%, you're going to be fine. You're able to maybe go up on in terms of how much you're willing to pay for that type of stable asset, which, if you're starting at a 6 cap, it's still affordable as opposed to going to Quincy where you're paying, 4% and sub 4% cap rates, which would be completely, 10 years ago, I was unheard of. But I think that there's still general cap rate compression. I think the stability of the market has still been strong enough that it's going to look at, or it's going to attract outside capital where you can still obtain a higher yield and still have exposure to a secondary market of Boston or an adjacent state where you still have a good employee or a pool of residents, of employees still within the 2 states. I think the fundamentals of the market are really keeping it tight on rent growth. It's going to keep going up. Cap rates are going to keep compressing down, and that stability is just, that's where a lot of outside investors are looking.
Thank you. I mean, I kind of want to comment too on that. I do see a lot of that happening, right? Because, you're seeing a lot of and kind of going to the next question is, repurpose, you're seeing a lot of repurposing, right, of development in the state of Rhode Island of existing space. I've seen a lot of that, and who are we seeing it from? I think that's something to ask the panel. I mean, I'm sure we are. I mean, I know on my end, I'm seeing a lot of these companies from Boston, that area, kind of repurposing spaces, and maybe not just Providence, but Rhode Island or other southern Massachusetts locations to get smaller office space, because the working from home phenomenon is real, right? That people can squeeze their rents, lower their space, and I don't know if anybody on the panel would like to comment on clients they've seen that have done that, and 2, where is that happening, especially in Rhode Island?
I can make a comment too. A couple of my clients have. You're seeing it in Providence. I've seen it in Pawtucket. A lot of. I think the first thing that was kind of repurposed were the old mill buildings, and that could be seen all over the state, where maybe it was a sleepy old mill town or a place like Providence or Pawtucket. I mean, you're still seeing those, but those have almost all been utilized, I guess, or if someone can get their hands on them, they're jumping on them quick. You're now seeing churches or schools being converted. Again, I'm sure those have been converted and repurposed for decades, but more so now. Now that the mill buildings have run out, and kind of just adding on to what I said earlier, we've worked on a couple of buildings in downtown Providence on Westminster and those areas, and just due to the soft office market, majority of developers look at those if they're vacant as a residential conversion, whether that's condos or apartments. You're seeing it quite a bit.
Kelsey, anything in Quonset that's happening in repurposing space for companies? Or I know you're doing a lot of the huge build out, but smaller space, almost a shared space.
So we actually have, it's not a repurposing really, but we have built a series of office buildings here. We call them the gateway offices, where folks can lease one office, they can lease 5 offices, they can lease the whole building if they want to. And we are seeing, we have several, 3 or 4 buildings that are all sort of 1 or 2 office leases, right? Where these Some of them are larger companies that have said, well, we don't need all the office space. We just need a couple spaces for folks to come when they need to. But we also do have folks who are still interested in leasing, a substantial amount of office space. So, and we haven't seen really, COVID hasn't, here at the park at least, impacted the manufacturing businesses really to any extent. We haven't seen anyone close their doors here at the park. If anything, in 2021, we saw a growth of about 700 jobs here at the park. So manufacturing here at least still seems to be strong. Nobody is sort of shuttering up and moving on.
Yeah, I mean, I'm seeing that in your space too, and kind of comment on that is that I'm seeing a lot of from my clients, a lot of firms like CPAs, attorneys who've learned to pivot and learn to, do more with less, right? These companies I'm seeing personally is they don't want to pay these Boston rents for 25% office space, and 25 office space, taking up. So we're seeing it a lot. We've actually had the clients who are real estate clients who've had CVSs is a good example, right? Anything that's not CVS owned, they moved all of their employees work from home or corporate office, and they're calling it a shared space, right? So they come in 1 or 2 days and share a cube or whatever it may be. And I think we're going to see more of that, right? Because we need, the world's going to adapt to working from home. It's the new norm. Not my thing, but it's just, I get it, because people, and we have to look at the dynamics of the workplace coming out of college. This is something they're expecting. So I'm seeing a lot of it, and I think Providence and the state of Rhode Island is ideal for it because we have a lot of these spaces that can fit their model. So
yeah, Peter, I've got 5 office buildings. Each building is, I want to say 30,000 to 60,000 square feet. They are full, 100% no vacancy. And they're all this model where you can rent as many offices as you need. You can rent month to month, or you can rent for 5 years. It's very flexible, and people seem to really like that.
I think one of the things that you have going for you on those gateway offices too, Chelsea, is that there's parking, there's no elevators, you walk into the door. I think those probably pre-pandemic types of situations that maybe weren't as favorable have become really desirable now.
And we have in those buildings, of course, we have shared conference rooms that anyone who's in there can use. We have shared cafeterias, we have shared bathrooms. So they don't take on the expense of those, but they have the benefit of them.
Well, it's funny, John said the parking, right? I mean, I think of Providence. My father owns a building right on Quonset Street, and I think he pays $300-400 a month just to park, right? Yeah. So think about just, and companies are paying for their employees. So think about if you have an employee, think of that expense alone you're giving, and you can go to Quonset and walk into this beautiful new building, all state of the art, and cut all of those expenses, maybe, and then have rent even be the same cost. That alone is a win for an organization.
I was just going to add, as the lawyer on the phone, I would just mention that I, talking about leases, some things that I've been seeing lately is a couple of things. A lot more emphasis and attention to the force majeure clause in leases, and wanting to add pandemics and government shutdowns, and then a real pushback by landlords of essentially saying, notwithstanding any force majeure event, you still have to pay your rent. Because I think that was in dispute during the initial, maybe a year and a half of the pandemic, was how does this affect the obligation to pay rent? So there's a lot more conversation and negotiations around the force majeure clause. You're starting to see, especially in like retail leases, what I call pre-negotiated COVID rent abatement provisions, where they'll say like, well, if there's another pandemic, then we don't have to operate and we don't have to pay rent. And then, the landlord will push back. Well, only if there's a government shutdown, by the governor of the state of Rhode Island, and you can only abate rent for 3 months, so it's like a lot of play around that, trying to pre-negotiate that. And then seeing, just in the conversion conversation, we're being asked to look at a lot of things like what are the existing use restrictions in leases or no build areas of a property to determine, hey, could we put a hotel there? Could we add multifamily to this typically retail property because we want to create more density. So looking at things like that and making sure that future leases don't have those restrictions that would restrict, because as we've learned, you never know what's going to happen in the industry. So, and the final thing we're seeing a lot of is permit extensions. So pre-pandemic permits that maybe didn't get acted upon because of supply chain demand issues or labor shortage issues or just the pandemic creating uncertainty, going back in and trying to extend those permits that arguably have lapsed, but maybe have not. So we're seeing a lot of that.
I like the clause, John, you mentioned clauses, right? I'm seeing it in my world too. I'm sure you're seeing it from the insurance end with your clients. Very common. President Trump, when he was president, came out and said business income should be covered by COVID. It's not. He said that on the news in front of millions of people, billions of people, and I like shook my head. And you'll see every insurance policy before had a virus exclusion. They've actually developed it more to have a communicable disease exclusion, which is a new form added to every single insurance policy out there. So being a little bit more thoughtful when you're writing your leases, right, John? Because I'm sure you have a lot of clients that are saying, well, I wasn't making any money, so how am I going to pay my rent and, you know, come get it essentially? Because I mean, I have all these employees out of work and we're not making the same amount of income, or they want to renegotiate in some fashion. But the clauses that I've seen make it tough to do that. I know there's still ongoing litigation with that stuff, and I think it'll go on for a while because, you know, people have the right to be in business, but carriers in my world, and then, you know, clauses on leases, you know, are tough to change, right? I mean, they're tough to change when they're already in there, and, you know, especially when you can't see something like COVID coming. It's kind of it changes the way you do business, and I kind of talking about business because it's called talking about development. I think business as we know in 2022 has changed dramatically from, let's call it 2020, 2019.
Well, actually, I have
John,
a question before we go on. Are you seeing a lot of action from 1031 exchanges in the Rhode Island market because of, you know, no one knows what's going to happen with that. You know, it's still up in the air. Has that been creating some stir in the marketplace?
I would say just quickly, I have seen, I did see, I would say before at the end of last year, I saw a scramble because there was uncertainty around it and people wanted to get things done before the end of the year. So I definitely saw demand in that. It even went so far as to see agreements get signed before the end of the year with, you know, with kind of contingencies for what happens if there is no 1031 at the time they get to closing, which I would have never imagined seeing before, but a lot of seller sensitivity to 1031 not being available when they go to close, say 6 months later. So there was concern and uncertainty around that.
Okay. And also, and this, Jeff, you might have seen it, and Tim, speculative construction on multifamily. Have you seen a lot of that happening in the Rhode Island market? Because now we have that situation where we need the multifamily product out there, more of it.
No, I mean, if anything on that front, I've just seen, obviously construction costs have continued to increase, and I think making the numbers work at certain sites is a developer's biggest concern right now. But I mean, you know, just adding on to the vacancy talk earlier, it couldn't be lower. I mean, I'm yet to underwrite a building with any vacancy, just about anywhere. So typically, you know, even these new construction buildings going up with typically higher rents than the market's used to seeing, you know, they become full pretty quickly.
Yeah, and I agree with Tim. I don't think, you know, when it comes to the spec market, either industrial multifamily, that's never that's not an issue for a lot of the deals that we're seeing or the projects getting completed. I will say that just to kind of go back to something that John had mentioned in terms of the retail market, borrowers are looking to explore different concepts to diversify their revenue or their collections from the rents that they're going to be achieved that they have been achieving over the last couple of years. I think, folks with retail properties that had some COVID issues are, exploring ways to, add multifamily or add some sort of mixed use concept so that they're not going to be so fully exposed to just the, traffic or just foot traffic or vehicular traffic wherever the property may lie. So trying to diversify those is a concept that, if you're savvy and you're looking to create additional value on your current holdings, that's something that's always kind of helps you get comfortable over the lack of availability of deals that are out there. Just investing into your current portfolio to see what is available from a concept standpoint. And then in the office, I'm seeing a lot of savvy operators come in and they've really put on their property manager cap on and have the conversations with their tenants to confirm like what they truly need and if their space is going to be able to meet their future needs of their businesses. And instead of having kind of a third party come in and not have those direct conversations and assuming, the what they're hearing on the news or trends that they're seeing from other clients is going to be applicable to their current tenant role. I think, if you're having those conversations, being very transparent over what the business owners need and what you can provide them in spaces that you may have available, that's going to be you're seeing a lot of success happen that way. So it's not all doom and gloom when it comes to the office. It's still a good story if you're a good operator, but I think it's certainly going to be more pressure being a good operator versus just your run of the mill operator that can be 30,000 feet in the air and have a property manager that's a little bit closer to the ground.
Well, Peter, I just want to go over a couple of questions that came in because while we're on the topic, this came in is there any evidence of a life science activity in Boston beginning to show interest in Providence, given the availability and cost of land? How will the proposed merger of Lifespan and Kia New England impact this? I'm not sure if anyone knows about that, but.
I can just speak sort of, just confidentially, but I have seen more, and you can confirm this with brokers in the area, that there has been a lot of RFPs or RFIs, if you will, for biotech companies looking for space in Providence.
Well, the biotech and life science has been hot all over the country, and they've been looking for space they repurpose office space as well in some areas. Are we seeing a lot of that in the Rhode Island market? And Chelsea, you might have seen some of that in your.
We haven't seen too much life science actually come to the business park, but we do. I'd agree with John. We have seen a lot of requirements for life science, biotech come through looking for space. Most of what I've seen, we have not necessarily been able to fulfill because those requirements have been looking for facilities that exist, not necessarily to ground lease and build their own. I've seen a lot of that. So we don't, except for our small scale flex industrial, we don't necessarily have that large scale presence that's ready to occupy. But we have seen a lot of requirements just sort of float through that folks pass around, seeing if we have anything that could help.
And I should mention that was submitted by James Haggerty. But there was another question from Kyle Gaffney. As the commercial parks grow, which this is probably more to you, Chelsea, have you seen any effect on local multifamily market? I think we know the answer, but.
Yeah, around the business park, there is a substantial amount of either multifamily or sort of small footprint single family in North Kingstown. As you all can imagine, the development of residential is really subject to municipal approvals, municipal approval processes. So it's all sort of depending on that, going right the way the developer wants it to go. But there's the whole Reynolds Farm development that has sprung up in the last 8 to 10 years here. And from what we hear from the town of North Kingstown, it's it's successful, very successful.
Okay, Peter, I think I caused my 2 seconds of trouble. Well, now I can turn it back to you.
I don't really have much more to add, Rick. I think the panel did a great job answering the questions. I did see on the additional questions, I didn't see any more come in, unless you did, Rick, privately.
I could not to put you on Jeff and Tim on the spot, but I was just curious. That, like, some things that you said made me think of a question of, yes, there is this prospect of interest rates rising throughout the year, but also like kind of not contradicting, but on the other side of that is this very low vacancy. I'm just curious of your thoughts on whether the interest rate push, which could be seen as like a headwind to development and investment, is sort of offset by this vacancy. Like maybe, it won't matter that this increased costs of the interest rates rising if the vacancy is so low. I don't know. What are your thoughts on that?
And so in terms of rates rising as a direct response to vacancy, I mean, that's coming more from the investors looking at a deal and seeing what it's going to take for them to make it work. So as their profitability margins increase, they're able to take on a higher, they're able to stress out their debt a lot higher, in other words, so that they don't stress out the financials for the project. So I think that there is some buffer in terms of allowing rates to rise and not directly affect the profitability in terms of, your whatever vacancy you're using to underwrite. Any deal I underwrite, I'm always putting in a higher vacancy, even if it's in a strong market. So you typically naturally have some stress testing to your models. But I think it's more about, well, I'm comfortable letting rates rise because I'm in a 2% vacancy market versus a 7 or 8% vacancy market. Because then at that point, if that truly ends up shaking out, my financial model might be a little less, it's not going to be as favorable.
Yeah, I agree. I mean, and I think where interest rates rising a little bit is going to have the least amount of effect on our other secondary and tertiary markets, where you are getting higher yield and higher cap rates, and rents even in those markets have exploded through the roof. And places I couldn't even fathom, people paying $1,600-1,700 for a 2-bedroom that you're seeing across the board. So I guess to answer your question, yes. I mean, with the less vacancy and higher rents, I mean, higher interest rates won't necessarily affect values, hopefully, too much, but I'd say more so where you're getting maybe a 6-7 cap compared to obviously a 4 or 5% cap rate.
Thanks.
Thank you. So on that, I don't have any more questions unless Rick would like to pivot.
Yeah, I know that's fine, Peter. Great job. I think the panel did a great job. I always ask everyone on the panel if they had a crystal ball, or they could predict what they see happening going forward for the rest of 2022. What do you see going on in the Rhode Island market? Do you see anything that might be kind of a sway in any kind of either financial or in the multifamily, in the office, or any segment of the commercial real estate industry? And we'll start with Tim. We'll put you on the spot. How's that?
It's fine. I mean, it's obviously it's a tough question. I think we all wish we had the crystal ball. I think 2022 is going to be another solid year, assuming interest rates don't tick up too much. I think a lot of people still have some catching up to do on where rents could be compared to maybe what they're getting them now. No, I mean, I wish I knew. I don't. One thing I will say is, pricing is at a point that I never thought I'd see in numerous markets across Rhode Island and Massachusetts. And you can only wonder how much higher they can go for how much longer. But obviously the big question is what's going to cause, prices to drop or rents to drop. And right now I don't see it other than interest rates, which again, I don't see, if those tick up to 4.5%, even 5%, shouldn't negatively affect properties too much. Obviously they will negatively affect values, but really how much more.
And Tim, before we move on, there was another question that came in it's directed to you. Can you expand on the office conversion to multifamily in Providence?
Yeah, so we worked on a couple. We have one under contract, and we worked on one in the past. Office buildings that were 12,000 to 36,000 square feet. And as you can imagine, the occupancy in those, is not great, or, tenants will have a 6 months to a year left on their lease, but there's 2 people sitting in the office and the writing is on the wall that they're not going to be renewing. So a lot of investors are looking at, converting these into multifamily, and you've already seen it quite a bit. I know, Paylino is obviously a big owner operator in downtown, and he's doing some lofts down there. But I mean, even some smaller mom and pop, owners and operators that people may not know, they're looking at the opportunity. And we even had some people from Boston come down and potentially look at a building to convert into condos. So I think while office is struggling, multifamily certainly isn't. And again, whether it's new or old, vacancies at a minimum, and you're going to have no issue filling these.
Great, thank you, Tim. John, let's find out what your predictions are. As an attorney, you probably want to live in the realm we're in right now, but let's see what you think is going to happen going forward.
I think in terms of Providence, I think the mayoral race will be really important. I think people are looking for leadership and guidance and stability of the city, and I think that'll impact likelihood of future investment in the city by developers and business owners. So I think that'll be really important to see. And I'm going to be the contrarian, and I'm going to say people are going to go back to work in the office. The office will look different, but I think there's a real desire to get back into the office and be together. And I think it's going to happen hopefully this year. But with that said, the office is going to look different. I think it's going to be more flexible. And I think that like configurations of offices are going to be different. So there may be some capital expenses and some creative thinking, and architects may be busy.
Yeah. Thank you, John. And I'm gonna get to Peter and Jeff last, because they need to be able to predict the future because of what they do. So Chelsea, why don't we go to you, and you talk about what you see up your back doing.
My crystal ball tells me that Rhode Island Ready is going to be very successful. And by 2023, we're going to have a whole inventory of pre-permitted industrial sites that are ready to go. But the other thing I would say, we haven't really talked too much about, the state's priorities, the federal government's priorities. There will be a substantial amount of money coming to Rhode Island for infrastructure, for housing. There's a very big push by the state of Rhode Island to focus on the blue economy, which is really any ocean-based industry, including offshore wind. So I think you're going to see a lot of impacts generally by, just through that investment that's coming into the state from other places, from the governor's budget, and then in that blue economy realm.
Great, thank you, Chelsea. And Jeff, so, lending money is a difficult task, not knowing what's going to happen in the future, but you have to have a kind of an idea. So why don't you tell us what NorthMarq is thinking?
Right. So when it comes to at least mitigating risk, there are structures that you can put on your debt that allows you to, some flexibility to, take advantage of a more accommodating rate environment. So whether rates start flattening out or, rates start increasing at a higher clip, being able to, refinance into permanent debt and fix it for longer term is going to be a tool that I think has been used for a while now. And a lot of folks that are more in a risk off mode are gonna do that. But I would say if I were to add a prediction in terms of kind of the lending environment, I think there's still going to be an uptick in rates, even though the market has somewhat priced in some of those rate hikes. I think, but I don't think that's going to slow down the capital. I think, when it comes to the players that are going to make the most impact, quarter basis point on your 25 bips on your debt isn't going to be a deal breaker unless there's some substantial market shift. I think that there's still a large amount of dry powder when it comes to the 1031 funds or institutional capital that are looking to get an uptick in their yields, and they're going to look at secondary markets like Providence that have a little bit more opportunities when it comes to land availability, and their cost basis are going to be allow them to tap into some higher profitable margins. I don't think that's going to slow down. I think fundamentally Providence and Rhode Island as a state has been a very stable market, and it's just hasn't been on a lot of folks' radars because they've of its proximity to Boston and it's between Boston and New York. But I think if you're a savvy investor, you're going to look at these areas, look at the fundamentals, see that it works, and I can't imagine the capital flow tapping shut anytime soon.
And last but not least, Peter, and no one knows better what the future is going to hold as an insurance company. They do as much investigating and research as anyone can possibly dream of. So tell us what you think the future lies.
So right now, just to speak what we're in a hard market. It's kind of like the real estate market, rates drive up when things shrink, right? But as that being said, I also, it also depends on the type of business, right? Higher hazard businesses, you're seeing larger market increases versus smaller. So the property market particularly, which this conversation is about, is you're seeing anywhere between 5 to 10% rate increases across the line. And that's for good accounts, good businesses. If you're not, I can't predict the future. It kind of goes back to what happened in 08, 09, kind of the same type of model. I think a little worse, to be honest with you, with the recovery. They're calling it the COVID rebound. So they want to see what this year, what I'm seeing from actuarial data is what happens in 2022. Meaning, how do businesses recover? Do we go back to normal? Because historically, right, some type of situation like this hasn't happened in a long time. So they're thinking it's, still another year and a half till businesses recover and everybody's moving 100% forward. But going back off what Tim and Jeff had mentioned about, they don't see a stop in loans and people requesting loans, and even with Chelsea with Development Park, I do see a lot of activity, and infrastructure is a huge piece of it. I mean, I'm looking at the federal grants we do have coming into the state, large sums of money, and some that work has to be done. So because if you don't use it, you lose it. So I don't know yet. I would predict that depending on the industry, is depending on your cover. Like hospitality, for instance, isn't something that insurance companies are ending up and wanting to do business with right now. It's not, but construction firms, developers who have a good history of consistent model even through COVID, everybody wants them. So it depends on how you got through COVID, and two, what you have moving forward for business in the bag, or as I call it, a backlog. What do you have available? So I do think we are in a hard market, no matter what business you're in. The effects of it depends on your success individually throughout the last 2 or 3 years.
Great. Thank you, Peter.
Thank you.
I want to mention to everyone, I want to thank you all, first of all. You all did a great job, a lot of great information, great moderating, Peter.
Thank you.
I want to mention to everyone, this will be on our podcast. So if anyone wants to listen to this, it'll probably be up on Friday. It'll be on our NEREJ/NYREJ podcast on Apple Podcast, on Spotify, Amazon Prime, as well as on our YouTube channel and the New England Real Estate Journal website and the New York Real Estate website. Also, the actual video of this, which is being recorded today, will be on the YouTube channel and the New York and New England Real Estate Journal websites. So again, I want to thank you all. I want to thank everyone for attending the New England Real Estate Journal 2020 Rhode Island State of the CRE Market Virtual Conference. I want to thank our sponsors again. Our corporate sponsors are Starkweather and Shepley Insurance Brokerage, Par Corporation, and this is our annual sponsorships. They sponsor every one of our events. Inspired Technology, U.S. Pavement Services, NorthMarq, and Mogul Architects. And this is our podcast, and I am the host. Again, I want to thank all of our speakers. All their contact information will also be on the recorded version. So anyone that does choose to want to be on or find out more about what happened today, they can go to the recorded version of this.